What are some opportunities to take advantage of in those years where your accounts, investments, just the market in general is in a decline? Hey, I'm Kaleb Paddock, the founder of 10 Talents Financial Planning, and today we're talking about some of the opportunities. We never like seeing our account balances go down, but it happens. If we look at any chart or history of the S&P 500, global financial markets, we see that markets ebb and flow. Now, it is true that 3 out of 4 years, 4 out of 5 years, on average, markets are positive, anywhere from 1 or 2% positive to double digits. And it's actually true that in most times when the market is positive, like the last 3-4 years, it's up by double digits, if not over 20%. And so we sometimes forget during those 3 or 4 years where the market is positive that, oh, right, we own a beautifully diversified portfolio, because there are years where the market goes down for whatever reason. Markets ebb and flow. Human emotion is very fickle, so we want to be aware of that. But what are some of the opportunities? Well, some of the opportunities would be in brokerage accounts. So brokerage accounts, you can do what's called tax loss harvesting. We'll have another video coming out there where I'll do like a whiteboard illustration of what this means. But this is a great way while you have capital gains from other sales. Maybe you work at a publicly traded company and you do have ongoing stock sales. You receive RSUs, you participate in the ESPP, Employer Stock Purchase Program. This can be a great way to offset those gains during high income years. So if you're still harvesting gains or selling for capital gains in a brokerage account, tax loss harvesting would be selling some of the positions that are negative, being able to harvest those losses and offset gains. It can make sense during those high income years, but remember, this is more of a deferral, right? It's a great tax savings in the current year, but we are simply just deferring that potential gain that you could have from that lower price point into the future, which is fine. We do tax deferral in 401ks and IRAs all the time. Tax deferral can be a really positive thing, but just realize it's tax savings now. We are deferring for later. So tax loss harvesting in brokerage accounts can be a great idea. Another idea in retirement accounts would be Roth conversion. So the idea here would be to convert at a lower price from your IRA to Roth. The shares would be the same. Like if you own 100 shares at the beginning of the year, the market's down 20%, you still own 100 shares. The value, the price is 20% lower, but let's say you converted 10 shares over to Roth. Well, you just converted 10 shares out of the same 100 you started with, but at a lower price point. Let's say the market eventually one day recovers and you're back to break even. Well, not so fast. Your break even would actually all be positive tax-free growth. So if you went from like $10 down to $8 a share back to 10, that growth, that 25% growth from 8 back to 10, that $2 in this very basic example, that $2 is tax-free growth. You quote broke even, but you actually came out ahead because that gain just to break even is now in Roth. It's in your Roth IRA. So great idea to take advantage of is to say, hey, let's use these down years, these declines, they're not fun, but we can do Roth conversions to try to take advantage or at least have a silver lining. So those are 2 great ideas, one in a brokerage, one in a retirement account. There's a bunch of others too, including rebalancing, including revisiting your targets, and deciding how to take withdrawals, especially in retirement during declines, and where should you pull money from. But that'll be for another time and another video. Thanks for tuning in today, and I hope you're not too discouraged if we've still got a decline when this video comes out, but really view these as opportunities to partner with your advisor and to understand there is opportunity here. All is not lost. Thanks again for tuning in today. Bye-bye now.